big sky, big potential. In association with Mills and Reeve, this is Eastern Promise. Achieving more together. This is the podcast that transmits the triumphant tales of the UK's world-changing, world-healing region around the world. That region is the East of England, and this is the Eastern Promise Podcast. Successful science requires three key elements. Three I's, if you will. Ideas, individuals, and investment. This week, we're looking at one of the Cambridge ecosystem's most trusted sources of the latter, Cambridge Innovation Capital. We'll hear from two of the CIC team, Managing Partner Andrew Williamson, and returning guest and partner of CIC, Michael Anstey, about their investment process, the importance of ESG, and more. I'm your host, Mike Rigby, and you're listening to Cambridge Innovation Capital on this week's episode of Eastern Promise. What a capital idea! For more than a decade, Cambridge Innovation Capital has been helping the innovators and entrepreneurs of that eponymous city to bring their ideas and new technologies in life science and deep tech to market. You can't argue with CIC's results. Over £500 million, with a B, billion pounds worth of assets under management. £250 million invested in more than 40 companies. And yet, you may be thinking, Mike, there's more to innovation than money. Of course that's true, and that's another reason I was determined to find out more about Cambridge Innovation Capital, the values piece, alongside their highly visible support for worthwhile initiatives such as Innovate Cambridge. And so it was. On a frankly glorious Thursday, I dropped by their offices on Station Road to find out more about venture capital in general and Cambridge Innovation Capital in particular. And I began with something of an admission. And I confess, there have been interviews where I've been nervous. Andy Mealy and Peter Freeman were sort of two fairly recent ones where it's about like, I'm going to prove that I'm a complete idiot within a few minutes of it starting. But this one takes the cake because I'm really fearful of exposing my complete and total ignorance of venture capital and how it works.
And we're going to exploit that massively right now, Mike. So, Andrew's licking his lips right now.
Right. Okay. I mean, you can tell me anything, and you can put an end to Eastern Promise right here. Before you completely I've literally got Venture Capital for Dummies cheat sheet.
Okay, very
That's
good.
how well it started. So, Andrew Williamson, Michael Anstey, and we're here on the fourth floor of 22 Station Road in Cambridge, one of the most dynamic addresses in the UK, if not the world. You'll have to forgive me, Andrew Williamson of Cambridge Innovation Capital. I do tend to rev up the hyperbole engine somewhat and really let it rip. And this is a real learning experience for me because I've freely admitted to my guests that venture capital is an area where I don't know a great deal, but I'm here on a learning mission to learn from them. I'm going to start with Andrew and then with Michael, who's already been a guest on the Eastern Promise podcast with one of his many other hats on. Andrew, tell us about yourself. Who are you? And give us a sort of a 50% look at the Cambridge Innovation Capital story, and we'll let Michael fill in the rest.
Okay, right, so about myself. So I am a physicist turned investor. So my career trajectory has been actually remarkably similar to a lot of the people we work with and invest in. So I grew up in North London. I was an undergraduate and PhD student in Cambridge in the 90s, studying theoretical computational physics. So my PhD was all about using massive supercomputers to simulate the properties of materials. And then when I graduated, I was really interested in being at sort of the cutting edge of innovation and technology and sort of the kind of things that I've been working on in my PhD and seeing them applied in the real world. And to be brutally honest, at that time in the UK, so this is sort of in the mid-90s, there weren't that many opportunities to do that kind of thing.
Yeah.
So most of my peers were either going to work in the city, and so I had offers from places like Credit Suisse and Goldman Sachs to go and be a quant, because as a sort of mathematical person, or to go and work in academia. So I moved to the States. So I went to the States originally for a 2-year contract and ended up staying for 20 years. And during my time in the States, I was an academic, initially at Berkeley on the West Coast. So I ran a physics research group. And then I started a couple of companies in the sort of semiconductor field, one which was not so successful, one which has ended up being very successful, is a multi-billion-dollar listed company today. Decided that was the trajectory I wanted to go on. So I went to business school in California and moved into venture capital. Worked in California and a few years in Chicago for a little over a decade, and then got a call from a headhunter here in the UK to come and have a look at Cambridge Innovation Capital, where we are now. And at that time, I was a bit skeptical. My wife, who I met as I was a graduate student here, moved out to the States with me. She works in biotech, so she was working for a company called Genentech, which is one of the, if not the leading biotech companies on the West Coast. I was working in venture capital. The sun was out, all is good. Why would we want to come back to sort of rainy UK? Actually, and this was in 2016, so Brexit Britain as well, actually. So there was quite a bit going on. But I sort of was sufficiently intrigued that I came and had a look. And I was blown away by how much Cambridge had changed in the 20 years that I've been away. From being essentially a pure play academic ivory tower where people were graduating like me and going to London or going to the States to get the action, to being what we now call the Silicon Valley of Europe. This is the most innovative city, and if you want to work at the intersection of science and technology and business and entrepreneurship and innovation, this is the place to be. I mean, exactly where we're sitting right now, when I was an undergraduate, was a pretty sketchy part of town. You didn't go near the station after dark, right? I mean, it was lit. And now look at it, right? I mean, Apple, Microsoft, Samsung, CIC, Amazon, all the rest. So the change was amazing. So basically, I signed up and came back, brought my family back to Cambridge to join CIC, and really, I thought that was an opportunity to get in on the ground floor of helping to build the innovation ecosystem here in Cambridge, because I could see then. It's amazing, it's already 9 years later, but the seeds of what Silicon Valley had looked like 20 or 30 years ago. The change in culture, the level of ambition, the level of entrepreneurship, the things that people wanted to do, all of that was happening here, and I knew how that was going to play out. And being part of that was too good an opportunity to turn down. So I moved back then. And so for the last 9 years, I've been working here at CIC. Initially, I was leading up our deep tech investment practice, and we can talk more about that. But so I've been investing in the kind of things I used to do research in. So this is supercomputing, now quantum computing, this is AI, this is semiconductors, those kind of fields. About 5 or 6 years ago, I took over as managing partner of CIC. So these days I spend more time thinking about where the money that we invest in those companies is going to come from, so interacting with pools of capital all around the world and talking about the great innovation story in Cambridge and bringing that capital in here and recruiting a team to deploy that. And we can talk more about that and some of the new funds we've raised in a minute, but that's me in a nutshell.
Fantastic. I mean, you've already, there's a list of questions that I feel like throwing out the ones I've sketched down here, because that's far more interesting. But Michael, it sounds like you're going to have a really interesting story too, but from a slightly different angle.
Well, I love sort of hearing Andrew's story. I know Andrew really well, but it's always great to remind ourselves where each of us have come from. And I think what you'll find in venture is there's not a clear path. There's not this is the path you go to become a venture capitalist and anything else doesn't work. Actually, everyone in our firm has come from a completely different past. I think the common theme you see in venture, especially the type of venture we do, is people have professional degrees in the area that they invest in. So my world started with my PhD in biology, and so I did that at Oxford, and just I love biology, I love life sciences, and being able to do research in that space was such a highlight for me. What I was less enthusiastic on was being an academic. I wanted to see the research come to life and be translated, as opposed to focusing on academic work, where in most cases the publication is the end goal. And so after my time at Oxford doing my PhD, I knocked on the door of a venture capital firm called Oxford Capital Partners, and I was familiar with them because they invested in a company called Oxytec, which was developing genetically modified mosquitoes to treat, I think they were to treat dengue fever in that case, and that was a laboratory that was right beside where I was doing my PhD. And so the concept of these really sort of smart people coming into labs, asking good questions, getting into the science, seeing how that science can be pulled out of a laboratory and put into the real world, I thought that was really cool, really intriguing. So I went and knocked on the door of Oxford Capital. That was run by two people called Ted and David Mott, and they were building a really exciting VC firm in Oxford. And I started there as an intern and did all the things that interns do. And then they kindly offered me a job as an analyst. And so I spent a few years as an analyst there, sort of learning the trade. And what I knew at that point was I wanted to be in VC. That was the sort of long-term goal. Now, Andrew missed one point, which is Andrew and I actually met for the first time in
2008.
I'm trying to think. This will be one of those bits where you have to play music while I think. So, yeah, and so
I'll do that now.
Yeah, exactly. So, yeah, 2008, that's exactly right. And so we didn't know it, but at the time we were in a fellowship called the Kauffman Fellows Program. And the Kauffman Fellows Program is the world's best program for training VCs. And so you can't go and do an MBA in venture capital or there's only really one place you go, and that's the Kauffman Fellows Program, which is based out of the Bay Area in California. And that is where the best VCs have all gone through. And Andrew and I had the privilege of being in that cohort together in 2008, which is 30 people probably from around the world?
Yeah.
So really tight-knit, really selective, incredible experience. Little did we know that now in 2025, we're sitting together in Cambridge. And so the network effect is amazing in this space. So after my couple of years at Oxford Capital, I then moved back to North America, where I'm from, and joined the Boston Consulting Group. And that's one path that you can find works well for VC, which is going into a management consulting firm, working with all of the multinational firms in that space. So I worked with all of the top 10 big pharma companies and working at the C-suite level on their hardest problems. So incredible.
Yeah.
My last project was in New York in 2016 with Pfizer. And Pfizer are experts at working with management consultants, and they really know how to extract every single ounce of life out of you.
Yeah, I bet they do.
And so I got a call from the same hunter that hired Andrew and said, there's this amazing opportunity with Cambridge Innovation Capital. Will you come and take a look? And I was like, yeah, Boston's not very far away. Of course I will, for sure. Actually, of course, this is Cambridge.
No, not that one.
Yeah, UK. And so, and that was sort of the starting point of this journey in Cambridge. And at that point, Cambridge UK really wasn't, it's not fair to say it wasn't on the map, because of course it was, but the reputation that Cambridge UK has now as a globally leading center of innovation is exciting. And actually, I think Andrew and I both joined CIC because this is a growing firm in a growing ecosystem, and that's much more exciting than going to the Bay Area or to the Boston area, where you're one of 1,000 investors all sort of elbowing over the same academic, and the science is just as good here. The ability to translate that science into great companies is just as good here. And so I think Andrew and I are both excited by growing something and growing something that's exciting and everlasting.
I mean, you're highlighting to me really the excitement you feel of getting in on the ground floor of something that you sense is going to be big and is going to be important, not just to the city itself, not just to the wider the ecosystem, but the UK PLC, etc. If as I am, you're mind to be grandiose, and that's fascinating. And kind of what interests me, particularly in the recent moves by the previous government and now carried on by this one around the case for Cambridge, and I've made this point kind of repeatedly, is there is no case for Birmingham, case for Bristol, case for Manchester, case for London. They've obviously focused in on this engine of growth as they would see it, and I find that really fascinating, because I think it's clear they expect the ecosystem of Cambridge to do something. Could you reflect on that and that kind of interest that's coming from central government in Cambridge, whether or not they get the ecosystem here, but what kind of opportunities is that throwing up that weren't perhaps there before?
Yeah, it's transformational. So I'll say a few things and Mike can add to it. So the way I look at this if I was from a UK PLC perspective, if I was looking top down, and I already mentioned Brexit once, I don't want to obsess over that, but if we look at over the next 10, 20 years, you'd have to be living under a rock not to realize that we need more growth in this country, right? It's pretty much a single headline, right? And so where is that growth going to come from? We're unlikely to become a manufacturing powerhouse. We've had a lot of growth in financial services over the last generation. Maybe there's some more room that can be done there. But the obvious place where the UK has always had a leadership role is in science and technology-based innovation. Right? And so where does that come from? Well, it's interesting, when I was working in the States, there's quite a diverse set of places that you see innovation coming from. Large corporate research labs, so that the Bell Labs of this world were a big source of innovation. There's a big national lab innovation ecosystem. I used to work at Berkeley Lab, which is one of the big government R&D labs, and then there's universities. When you look in the UK, we largely ran down our corporate R&D during the 80s and 90s at the end of the last century. So there's some innovation, and it's starting to pick up again. And obviously here in Cambridge, for example, we have places like ARM, so there is some of that. Not much of a national lab ecosystem to speak of. So really, where the most action is in the university ecosystem. And thank goodness we have, depending on how you count it, 3 or 4 of the top 10 research universities in the world in the UK, and actually they're all concentrated in what we call the Golden Triangle of Oxford, Cambridge, London. So within 50 miles of here, you've got an amazing concentration of this, what used to be fundamental science activity, but is increasingly becoming the science and the innovation and the commercialization of that science to create economic growth. Why is the government focused on the Oxford-Cambridge arc and this Golden Triangle right now? I think there's multiple reasons. Obviously, the quality of the science and the volume of it is big and always has been. I think there is a sort of a critical mass effect certainly when it comes to the innovation ecosystem, that when we're launching the next AI or biotech company and we're hiring in the senior leadership to come and grow that company, it's quite easy, or it's increasingly easy for Mike or I to reach out to someone around the world and say, hey, come to Cambridge and be the VP of development or the chief technology officer or whatever it is for this company, because it's a great company and it's got all of this potential. But of course, early stage companies have risk. But the nice thing about doing it in Cambridge is, well, if that one doesn't work out, there are 3 more down the road that are doing similar things. So actually making a career bet to move to Cambridge and be part of this ecosystem is not that risky. That was always the strength of Silicon Valley as well, that people would just move there without a job and just sort of find something. And I think we're starting to see that sound. So I think this is probably perhaps the only place in Europe where you've got that sort of critical mass of activity that you can that the most talented, the best ideas can come into the ecosystem and start to create the kind of economic growth that we live in. So I think it's natural that people are leaning into that.
Yeah.
I think what's exciting about Cambridge in the last 30 years or so, this ecosystem's been quietly working away, head down, doing world-class research, building companies, and there's some already fabulous success stories that have come out of this ecosystem, both on the deep tech and the life sciences space. And it's just been sort of steady. In the last 10 years, it's been accelerating, right? Where you've got this sort of, we think about this cycle of great idea into a company, talent coming in, the company growing, the company having an exit, money being made, talent being released, next thing happens, and you go around and around this wheel. And so in other ecosystems, I think it's not a better or worse where you can't say, Cambridge good, think of another UK city bad. It's just we have been doing this for longer, and so there's just more experience here. And as you go around the wheel more times, you start to go faster, and so there's more things happening. So the concept for the case of Cambridge is it's wonderful that people are now recognizing the incredible things that are happening here. But that has not been happening for the last sort of 6 months or 2 years. This has been going on for decades. And it takes a long time to build these ecosystems.
Andrew, you said, I'll actually direct this question to Michael first. Andrew, you mentioned one of the magic keywords I've got written down here, which is risk. And what interests me is, to what extent do you find that the very name Cambridge is in itself a de-risking factor? Or is that just a postcode and you've got to look deeper?
Well, let me indirectly answer that. So our job is to manage risk, right? We are deploying other people's capital, and we are very thoughtful about that, right? Every decision we make is a really important decision. We have to make sure capital goes into the best possible places to get a financial return for our investors. So we're managing risk on a daily basis, and that's why we take a portfolio approach, right? The idea is you don't just back up a truck and put money into one company. Mm-hmm. And we can talk more about sort of how CIC works in our funds and such, but typically for a given fund, which is a pool of money, that money gets deployed into 20 or so companies, right? And those companies are diverse from sectors. So it's not just deep tech and life sciences, but within that, then there are subsectors, whether it's therapeutics or med tech or quantum or AI and such. And so we're placing a bet really on IP-rich businesses emerging from this ecosystem. And the fact that there's incredible track records already here and experienced academics, experienced CEOs, the name is not what de-risks it, right? It's the 30, 40 years of experience and learnings that allow us to be able to be excited by the investments we place, right? Along that sort of portfolio approach we mentioned, and not all are going to work out, right? Despite our best efforts to do as much diligence as we possibly can around the technology, the team, the market, et cetera. So sort of things change between when we invest and when an exit happens. And so our goal is to ensure that the money deployed is carefully balanced, and then when we see a company, we use the term sort of popping in a good way, right? Then we can accelerate our investment and accelerate more and sort of go for it. So that is the juggle. That's what we're sort of seeking to do here, and ensure that our investors, our LPs, get great financial rewards from what we're doing.
So do you tell me about how the process starts. I mean, is it kind of, you do research, you get like a sort of spidey sense of where you should be looking? I mean, clearly, as you can see, I'm clueless. But I mean, either one of you jump in and answer the question. But where does the process start for you?
Spidey sense is actually not a bad expression, in the sense that there's a lot of pattern recognition, which is another way of saying that for looking at deals. But taking a step back, I mean, we want to be as thesis-driven and proactive as possible about how we make our investments. So, there's a lot. If you read a lot of the literature, or you talk to entrepreneurs, it's all about, how do you persuade a VC to invest in my company and all this. And actually, it's all about fit, and it's about finding a VC that's already researched your space, has a thesis around how to make money in a particular biotech sector or technology sector, and there's a fit between the way we think about the world and how to build businesses and where our experience set is and where those entrepreneurs are. So it's a highly selective process. We look at several hundred investment opportunities a year and willow that down to 5 new companies that we invest in each year. So it's sort of 1% to 2% of all the things we look at actually end up as an investment. And what we're trying to do is, as quickly as possible, sort of look at the key risks or challenges to an investment and retire those. So, so if we've got a concern about the market or we've got a concern about the technology, we'll go in and we'll do all of our due diligence on that piece before moving forward with discussions on another piece. So, and it's a process. It's one that we go through on a daily basis with a large number of opportunities. We strive to be as quick as possible. because there's nothing more frustrating for an entrepreneur than just sort of being made to wait while we come up with a point of view on whether we want to move forward with an investment. So we try and go quickly, particularly if we're going to get to a no, we want to get to a no as quickly as possible. I think that's reputationally important, but also to be rigorous about our diligence. And perhaps the best way to do that is to be sort of prepared in advance, so we already sort of know what we're looking for.
Yeah. I mean, you strike me from everything I've read about Cambridge Innovation Capital to be, and Michael, perhaps you could sort of reflect on these 2 points and see what you think, both very discerning and kind of like the gold standard, particularly in this ecosystem and probably more broadly too. I mean, is that fair?
I'm thrilled to hear you say that. That's what we strive for, absolutely. Each of us live in Cambridge and work in Cambridge, and so we take it very seriously. You know, every decision we make is an important decision, and the relationships we have in the ecosystem and beyond are really, really important. So our goal is to be the first choice for an entrepreneur or an academic to seek funding from. And when you look backwards at the deals we've done, they're very rarely in companies or an individual we haven't known for years in advance, right?
Yeah,
and so in many times, and if I think about an academic that has a great idea, we will get to know him or her well in advance of when they're ready for a company or when they're ready for venture capital investment from that company. So it's a long game, and when we do invest, this is a long-term commitment, and it can take 5, 6, 7, 8, 10 years from the point of investment to the point of exit. And there are, without a doubt, ups and downs during those 10 years. And the real test is how are you going to, how are you, the CEO, how are you, the investor, going to respond when inevitably, a challenge happens? And so we just do our very best to ensure that despite ups and downs, things keep going. There's trust still to be had.
Yeah, I mean, actually, one of the things I was thinking, just thinking about was a slightly dry question, but to what extent, when regulation is hampering an otherwise really quite sensible and exciting prospect, is regulation something that Cambridge Innovation Capital would get involved in a scrap on?
So there's different types of regulation. Obviously within our life science practice, and particularly in therapeutics, I'll let Mike talk to this. There's a whole clinical approval process, and we absolutely get involved in. Well, I'll let him talk to that. On the broader sort of investment policy side, we are seeing more policy involvement in our industry than I ever have in my career. And I think that's because some of the sectors that we're working in increasingly are butting up against national priorities. So for example, in a lot of the deep tech stuff that we work on, things like AI and quantum computing, there are national security implications for some of those. If we had a quantum computer that could do somewhere between 1 million and 1 billion calculations, a sort of megaflop to gigaquop computer, you could crack all of the internet's encryption. People are talking about Q-Day, for example, and that's going to come in the next 5 to 10 years. And so obviously the government and the national security agencies are very concerned about how that's going to play out, who's going to be investing in it, that technology, who's going to be controlling that technology. So there are various policy rules around something called the National Security Investment Act that are governing some of those technologies. Equally, there's always been a lot of regulation around takeovers, right, and antitrust competitiveness, and in the tech side of things we work in, people like Microsoft have historically bought a lot of businesses from investors like us. That's getting more challenging because of various, where the geopolitics are. There's fewer buyers who are acceptable, and so that kind of regulation / policy is something that we have to be increasingly involved in. I currently sit on the board of the British Venture Capital Association, which is the trade body for the UK, and that's our job. So, when government wants to speak to the industry and says, we have a concern about this, but we don't want to do something which is going to impact innovation or impact economic growth, we will have that conversation and we'll figure out the best path forward. And I have to say, both the current government and the previous government was very collaborative with the industry on dealing with those kind of regulatory issues. We can't shy away from them. I mean, it is complex, and we just have to do the best we can. But it is a very open dialogue.
Yeah, it's different on the life sciences side, which is the sorts of things we invest in, whether it's a new drug or a new medical device. These are going through a well-established regulatory process, whether it's through the MHRA or whether it's through the FDA. There is a clear path to go from research to a clinical trial where you do something in a human being to eventually being marketed. And that is a strategy that companies need to think through very, very carefully, because these are very expensive trials you need to do. They take a lot of time, and if done well, they can give you a sustainable competitive advantage. And so as we do our diligence, we are obsessive about what the regulatory path is for these companies, and make sure that they get it right. Because if you get it right, it can be a competitive advantage for us.
Fascinating. I have some experience in my previous life of, because I was very fortunate to sort of sit in meetings in Westminster in those sort of green leather rooms with Puget on the walls, sitting quietly whilst lots of very clever people talked, lobbied ministers, and you sort of soak it up in all the discussions. And I find that fascinating, the kind of, horse trading's the wrong word, but the kind of the push me pull you that goes on, and the how MPs in particular lobby for things in their constituency. Anyway, now this is a question I've written in big letters, and I want to come on to the ESG thing that was pointed out to me earlier today. But this may be a rather dumb question, but bear me out. Does the ecosystem make the investor, or does the investor make the ecosystem, or, as I suspect, is it somewhere in the middle?
Oh, that's a good question. And is the investor the person or the firm? And the firms are a combination of people. But so I think CIC story is quite a good example of that, in that we were created by the ecosystem for the ecosystem. So there's a very clear founding story. If you rewind to sort of 2012, as the acceleration of the Cambridge innovation ecosystem that Mike was talking about was clear for all to see. And it was increasingly clear also that there was a gap, right? That there were all these early stage science and technology businesses being created, spinning out of the university, spinning out of the science parks. They were accessing early stage foundational seed capital. The university has a very active seed fund. There's lots of active angel investors, things like that in the ecosystem. So things were getting going, and we were seeing thousands of early stage businesses being formed. But there was a very clear gap, which was for an institutional investor to service the ecosystem, to be good at investing in the kind of businesses that a science and technology innovation ecosystem like Cambridge is creating in increasing numbers. And the sort of investors, the venture investors who existed at that time, well, there were very few in Cambridge, first of all, and the ones who were in London, this wasn't quite their cup of tea. They were more experienced in investing in fintech or consumer or social media, that what I would call the light tech businesses. But the kind of businesses that we invest in, and at the relatively early stage when we invest, where there is science and technology and regulatory and biology and all these kinds of additional risks on top of the usual startup risks of finance and team and market and execution, they weren't comfortable taking that risk or diligencing that risk. So CIC was built with that purpose in mind. So everyone on this team was custom hired to be good at investing in deep tech or biotech or medical devices or AI or the different sectors that we invest in. So in that case, I think this ecosystem very much made CIC. We were built by the ecosystem to play a role in this ecosystem. And that has worked brilliantly. I mean, and that's quite different actually to if you look in Silicon Valley, where you sort of see these trends that sort of flow every decade or so. When I started my investing career in the noughts, clean tech was a big trend, and actually because I did quite a lot in material science and understood energy and materials and stuff, I was part of that wave. but there were no clean tech firms set up to invest in that sector. They were people who had previously done computing or biology, repurposing themselves as clean tech investors. That didn't work out very well, actually, and everyone lost a lot of money because they didn't really understand the nuances of those industries and how they were different from where they came from. So I think having CIC custom built to be good at investing in what Cambridge was looking for has worked out brilliantly, actually. And so very insightful question. We were made by the ecosystem.
And has that put, Michael, like a natural geographical boundary on CIC's activities?
I'm glad you asked that. So our ambition is very global in nature, right? What we're not seeking to do is invest in the best in Cambridge, right? You'll lose a lot of money doing that.
Right.
We're seeking to invest in the things that Cambridge is truly world leading at. And the things we obsess about here are, is this deal we're looking at as good or better than what's in Boston, what's in Shenzhen, what's in Tel Aviv? We obsess about that. And the fact that, Ange and I spent our previous career in the US is really helpful because we will sort of phone a friend and say, what are you seeing in Boston right now? What are you seeing in the Bay Area and how does this compare? And so we are seeking to build global category leading businesses. And so the model for us is it starts in the greater Cambridge ecosystem and it grows whether it's the US or Europe or Asia or all the above. And that is really part of our core ambition.
Well, I want to come on to the 100 million fund that you set up with Aviva and British Patient Capital. But before we do, I tip my hat to Louise Border at Mills & Reeve, who, when I told her I was coming here, got really excited about the ESG policies that she said you were putting in place. So this is your opportunity to tell me. I mean, as a huge believer in these things, and I know that this is an area where Cambridge actually excels, but tell me more.
Yes, ESG and impact more generally is something that we've put a lot of investment into over the last 5 or 6 years. I feel a bit of a fraud here because Michelle Lamprecht, who leads ESG at CIC and really has become a leader in the industry, actually, over the last few years, is sitting next door. So you may want to do a whole follow-up session with her, actually, and she can give you some passionate stories. But how do we approach this? Look, I mean, I think this is a generational change in the, so I talked about how when I was graduating in the 90s, there wasn't that much interest in, or there weren't that many startups and sort of innovation to work in. Now that's changed, and the students who are graduating today, the coolest jobs they can get is working in our startups. And when you survey the young graduates who are starting out in their careers and you ask what type of company do you want to work in, and not just what's the business they're in, but what's the culture, what's the ethics of those companies. They want to work in companies that are going to have huge positive impact, that are solving big challenges for the world. They want to go home at night and feel really proud about what they're working on. So I think this is a cultural change across society, but it's certainly being driven by, I think, the youngest and the newest employees in our workforce. So we've thought holistically about our investment practice, and first and foremost, this is just good business, right? So what are the ESG risks and opportunities associated with every investment we make? How can we, and nothing is perfect, right? So when we're looking at an investment opportunity, we're looking at the environmental challenges that might have and the environmental opportunities that have, similarly the social and governance opportunities. There's a whole section in those investment committee memos that we prepare and the diligence we do analysing all of that. And when we sit in this very room and are debating whether to make an investment or not, part of that debate is what's the positive impact it could have? What's our thesis for that positive impact? What would we need to do to realise that? And equally, on the other side of the coin, what are the risks, right? And if we got this wrong and the product went in a wrong direction, or they didn't shape it this way, or they didn't prioritize the supply chain in this way, or whatever it is, that could be a business risk, right? It costs us money, it could cost us reputation, all the rest. So that's become sort of integral to the way we work. It's not sort of a bolt-on. It's just part of, I think, good business going forwards for making investments. And so we rolled out our first ESG policy, I think, in 2018, 2019. Initially, it was a sort of practice what you preach. So within CIC's own operations, thinking about those risks and opportunities, then starting to integrate it into our investment practice. What Michelle realized very early on was we're investing in companies when they're quite early stage, when they're quite small. They don't have the luxury of having a head of ESG, a chief sustainability officer, somebody who can think about all of these issues and do all of the analysis. But we can as an investment firm. So we started to roll out best practices and ways of thinking about particularly environmental impact, how to do the analysis of that, how to share that with your employee base, how to report that back to your investors like us. So we do a lot of training now for our portfolio companies, and because they were facing similar challenges, so it's easy for us to sort of stamp that out and sort of show that to all of them. Michelle's joined the board of something called ESG VC, which is now there's a sort of a trade-wide group that's thinking about best practices here and how we report on them and analyze them and share them. And it's just been phenomenally successful and really embraced by the portfolio companies.
I should really get a bell or something to signify whenever anyone says the word opportunities. And I love it when people sort of signify that there's opportunities to be seized, and by doing the right thing as well, which is wonderful. And I really take my hat off to Michelle for running with that. I mean, before I come on to sort of the point about Aviva, British Patient Capital and the Startup Fund, if I could even say those words.
I'll just make one shout out to one of your previous podcasts, which was around Innovate Cambridge, which we do with Catherine Chapman. So Andrew's mentioned one aspect of making sure we are maximizing everything we can do around our ESG strategy. The other aspect that we're working hard on is ensuring that there's local positive impact for what we do. And so as Cambridge as an ecosystem continues to thrive, it's going to get busier, right? It's going to grow. How do we ensure that every resident of Cambridge feels the benefits of the unicorns that are created here and the fantastic innovation that's happening here? And the whole Innovate Cambridge mission is around that inclusive innovation. So just a reminder of that is something that we are doing at a local level, not just with our portfolio as well.
I mean, I'm not just saying this because you're in the room, and I'd say this to anybody. Cambridge Innovation Capital now is increasingly feeling like, if I can put this in an slightly awkward phrase, part of the furniture of the ecosystem, because the imprimatur is there on things like Innovate Cambridge, because obviously you were on that podcast, which, not for nothing, is currently, of the last 10 episodes, still the most listened to.
That's just Catherine's so great. So
don't discount your own. And we had a little tour around the glass house that we stuck in there as well. But no, it really is, and it has become that, I think, that sort of mark of quality alongside things like Cambridge Enterprise, Innovate Cambridge, that you just think, this is serious. What we're dealing with here is serious. We're talking serious policy, serious people, yes, who can have a laugh and a giggle, but yeah, it's really that mark of quality that signifies that something serious is happening in Cambridge, and something exciting too. So let's go on to this 100 million pound fund, because it's got Aviva on it. Aviva being obviously based largely out of Norwich, and I'm sort of duty bound to bring it up, but that it did catch my eye, and this scale up, the idea of the scale up funding gap. So do you want to tell me some more about it before I sort of ask my searching questions?
Happy, this is one of my favourite topics, so happy to talk about this. So when you think about the world of venture capital, the world of startups, innovation, there's sort of a journey that every company goes on, right? It's from sort of twinkle in the eye and an idea and a couple of founders getting together and raising their first few £100,000 to get started and try out a few prototypes, through to what we were set up to do, which is originally what I would call early stage venture, which is investing a few £1 million to grow businesses, to get their first customers, their first products, scale up to tens, maybe hundreds of employees. That's sort of traditional early stage venture. And we've been doing that now for about 12 years. Well, what does success at that part of the journey look like? Well, historically in Cambridge, success in doing the early venture journey well was getting acquired. right? And so there's a slightly pejorative sort of catchphrase going around 10 years ago that Cambridge was the spare parts engineer for the world's technology companies.
Right.
So what they meant by that was brilliant ideas that got reduced into products and just about to have commercial success. And then Microsoft or Siemens or whoever Intel would swoop in and acquire them and use them in their business, right? Hence the spare parts piece, right? So I was good in the sense that Cambridge innovation was making its way into the products and services that people around the world use. So Cambridge was having a global impact, but not great in terms of economic growth either in the Cambridge region or for UK PLC. So one of the sort of founding goals of CIC, and I think many of our peer institutions, is to grow bigger businesses that have more economic impact here in the region, here in the country, significantly creating jobs, perhaps bringing back advanced manufacturing or providing services at scale. So solving this scale-up problem. So one of the things we're always thinking about is when we get to that point where the business has grown to a few hundred employees, it's got its products, it's got a few million in revenue or whatever it is, there's a decision point that comes, right? There will probably be an offer that comes from some big tech or biotech company around the world. We like what you're doing, we'd really like to buy you guys. And historically, the main reason that people have taken that offer was because the alternative was to raise a lot of money to scale up and build a big independent business. And it was hard to raise that money, right? So this is called the scale-up financing gap. And it's something that now we've been doing early stage investing for over a decade is increasingly in focus for us because businesses that we invested in 2014, 15, 16, 17, 6, 7, 8 years ago, as Mike said, that's typically sort of our early stage hold period. Many of those are approaching exactly that decision point of, am I going to raise significant amounts of capital and really grow, or am I going to sort of take my chips off the table, as it were, and exit? And we want to give them at least the option of growing into being big, impactful businesses based right here. So we need to be able to provide scale-up capital. This is something that it's sort of a national priority. So the British Business Bank, which is actually now the largest investor in venture funds across the country, has made one of its top priorities to provide more scale-up capital. And it aligns beautifully with the other big sort of financial trend of the last couple of years, which is the government's in particular, encouraging the leading financial institutions of the UK, and in particular the pension funds, who have trillions of assets under management, to allocate some of that capital to UK economic growth. Because we'd got in a little bit of a rut where pension funds, and this all stems back to Maxwell and sort of some of the pension scandals, right? Had sort of overcorrected post-Maxwell and focused on regulation and minimizing fees and costs and fraud and all, which is obviously important that you have to take control of those things, but they've taken their eye off the ball a bit in terms of performance and growth. And so in the US, when I was working there, maybe half the capital in the funds I was investing was coming from pension funds and endowments and long-term growth institutions. In the UK, that number has come right down for those cyclical reasons. And so government has put a big focus on encouraging domestic pools of capital to invest in the growth of the economy, both to improve their returns, but also to do a great thing for UK PLC. It's a genuine win-win. Yeah. And so there's been something called the Mansion House Compact that you might have heard about, where Jeremy Hunt, when he was Chancellor, and Nick Lyons, who was Lord Mayor of London, invited the leading 10 or 12 pension funds to come together to talk about ways that they could do this. Aviva was one of the signatories of that compact a couple of years ago. And what we've seen over the last couple of years is just a fabulous sort of reversal of that sort of extraction of risk capital from these big institutions and starting to re-engage in our world. And so Aviva have invested in us. We're also working with Legal & General and M&G and some of the other pension funds to bring more capital into these, I think, vitally important sectors. The natural place for a a slightly more risk-averse institution to access our world is probably at this scale-up stage, where the businesses are a bit less risky, right? Mm-hmm. So the way I describe that, the fund that we've just launched, is it's for investing in science and technology businesses where the science is largely done.
Yeah.
It's all about execution and scale-up,
exactly.
right? So we're no longer worried, will the widget work?
It's a matter of,
the widget works, you can see it, it's right there. It's how many can we sell and how much profit can we make and how quickly can we scale things. So lots of execution risk and things like that. So that's what this fund is all about. It's about attracting in this scale-up capital to help grow some of the highest performing businesses in our portfolio.
That's fascinating. I mean, just before we close, Michael, one of the things I struggle with is the instinct to sort of turn the pipeline that inevitably, as you say, Andrew, risks ending in a business disappearing off to various parts. I know Germany. I was talking to a PhD student about Cambridge ecosystem compared to the Munich ecosystem. Mm-hmm. Someone was talking about Saudi and obviously the US as well. And I struggle between the difference of, yes, for UK PLC, we need to do all we can, as Andrew says, to kind of not halt that in its tracks, but at least offer an alternative. And between that and actually making the pipeline a thing we can take advantage of. There's a pipeline that we can sort of say we are the natural route through to green pastures elsewhere, and while you're with us we can nurture you and perhaps even if needs be help you on your way, so that the pipeline becomes a thing of an attractive proposition. So a big question, but how do you strike the balance between we want to keep you here versus we want to encourage you and use these big places outside the UK as a means to lure you in and come and be part of us for a little while at least? Or is it both?
Happy to start, and Andrew will join in. I think a vision we have for CIC, which will take time, is CIC can be your first check as you raise money, and also your last check, and everything in between, right? And that's a big, bold ambition, because there's quite a lot of chapters along that journey, and we're not there yet. But if we can do that, and play an active role on the board of these companies, and if I think how Andrew and I spend our days, a lot of our time is supporting the companies we've already invested in. So post-investment, we sit on the boards in most cases, and our thought partners, our colleagues, were hand in hand with the CEO, not running the business because that's the CEO's job, but being that trusted advisor for the CEO, and with that, we seek to push them to have the highest ambition they can have, to have this fantastic outcome. And depending on the company, a model we've seen that works really well is start in the Cambridge area, do what they do really well, which is the early stage research and development where the fantastic technical talent here lives, and when appropriate, grow and build new sites in other geographies. And if I think about one of our portfolio companies called Bicycle Therapeutics, right? That's been going for over 10 years now. Its global headquarters are in Cambridge, right? That is a UK PLC company, but it has a site in Boston. It's listed on NASDAQ, and it has tremendous ambitions as a company. And so this is a global biotech company now, but it is still based in Cambridge, but it's just not only in Cambridge. And so that is a model that can happen, these global ambitions, but not to sort of pick up and abandon where they began, because you don't want to. You'll lose talent, and you'll lose some of the core of what makes those businesses special.
That's a great answer. Thank you very much. Well, gentlemen, you've been very gentle with me as a noob to the world of venture capital, but I've thoroughly enjoyed it, and I wish we had more time to dive into this and so much more I could ask. But for now, at least, from the beautiful offices of Cambridge Innovation Capital, Andrew, Michael, thank you so much for your time this afternoon. It's been an absolute pleasure.
It was a pleasure. Thank you for coming.
My huge thanks to Andrew, to Michael, and all the team at Cambridge Innovation Capital, including Michelle Lamprecht, Eva Bello, and, I hope I pronounced this correctly, Rojbin Kutku. I am in no doubt whatsoever that CIC will continue to be a trusted partner, a mark of quality, and a vital enabler in the complex and giddying ecosystem in Cambridge. It was a true pleasure to find out more about what they do and to share that with you. And that's all there is for episode 134 of the Eastern Promise podcast. I have been Mike Rigby, and I will be so again in 7 days' time, when we will be embracing the arts in the field of cultural heritage, classical music, and homegrown cinema. A feature that's been waiting for its premiere. Yes, Tours, Tunes, and Tinseltown. Get ready for your close-up. So until then, bye for now. To hear other episodes of the Eastern Promise podcast and to find out more about what we do, go to our website at easternpromise.org.uk. Eastern Promise is a Pudding Shed production in proud association with Mills and Reeve. Achieving more together.